Well, everyone, me Kevin here. It happened again. The market pulled another Uno reverse card on us. That's 2 in a row. That's kind of as if we've got like a double Uno reverse going on or something here, but it's not like we're getting the reverse back in our favor or anything. No. It just, the same crap happened to us twice. Market goes up twice. Yay, market's going up. Oh, nope, just kidding. And then same thing this morning. This is what happened Thursday. Market goes up. Oh, nope, just kidding. This is despite the fact that this morning, Goldman Sachs via the Bloomberg terminal says, oh, higher rates are priced in. Or good. We don't have to worry anymore. Folks, I think this Archegos, and this is just my speculation here, but I think this Archegos family fund disaster, where this family fund ended up having not just, and when I say family fund, basically think hedge fund with more secrecy rules. They had 8 to 20x leverage. By rehypothecating the same collateral, I would not be surprised if we have a lot more leverage issues on Wall Street than we even realize today. Quick explanation as to what that means. So you go to a bank and you're like, yo, I want to buy a house. I got this $100,000 to use as a down payment. Usually when you buy a house, I mean, this is how it would work, you would put your $100,000 into an escrow company. The lender, the bank, would look and go, okay, you got your $100,000 there? Okay, now we will give you the other $900,000 so you could do 10% down on your $1 million house, let's say. Okay, that's normally how it works. But because of these private hedge fund, family fund, bullcrap secrecy rules, basically, this Archegos dude is able to go, hey, put 10% down on this house over here, except instead of a house, it's, contracts on stocks, which we've explained in a different video. We're not going to re-explain it here. You could look that one up. Just type into YouTube, Meet Kevin, youtube.com, Meet Kevin, hedge fund leverage or margin. Meet Kevin, hedge fund margin. And will the hedge fund meltdown crash markets? Okay, so if you want an explanation in terms of what kind of derivatives they were buying, that's a good one. Okay, so watch that one. But this is kind of part 2 to that. And the reason it's part 2 is because we explained what this guy was doing. Let's go back to this house example. You take $100,000 with these secrecy rules. You're like, yeah. This $100,000 is my collateral. Let me borrow 3x to go buy stocks. Totally normal. Okay, no problem. You got your $100,000, no problem. Here, we got $300,000 we can play with now. Except in this case, instead of being $100,000 and $300,000, it's $2 billion and $6 billion in leverage that he's basically able to use in total. But now this company goes around to all the different banks, does the same thing. There's no escrow company because there are privacy rules. There's no rule that says, okay, well, you got to take your collateral and park it over here. No, you just keep your collateral. Well, now he's able to use that same collateral for multiple different banks, potentially 5 to 6 different banks, and leverage up as high as 8 to 20 times on his bets. Well, the market doesn't have to go down a lot for you to get screwed in that kind of scenario. Look, if you've got 100% leverage on, let's say, Tesla stock, and it goes down around 35%, you're probably going to get a margin call. If you got 8 to 20 times leverage on something, the market probably only has to go down like 5 to 8% for you to start bleeding, and maybe 10% for you to start getting liquidated. And that's kind of all it took with this hedge fund. And so what does this have to do with now? Well, folks, get your hit points up, basically. And yeah, that's actually kind of what I mean. I believe that it's possible a lot of hedgies are using way more leverage than they should be. And potentially the reason we keep seeing these Uno reverse, the Uno reverse is these false starts in basically a stock recovery after this 6-month crash is because every time stocks go up, hedge funds realize, you know what, this is a good time to rebalance, pay off some more debt. I don't know. I could be wrong. But the problem I'm seeing is we don't have a very clear rotation anymore. It used to be, initially the first 3 weeks, it was like, oh, just plow money into recovery stocks, sell tech. Really? But wait a minute. Dave & Buster's is down. You've got Redfin down. You got Enphase down. Enphase not tech. You've got other companies over here like Cheesecake, 2% down. The Simon Property Group's down. You've got Nordstrom's that's down. Macy's that's down. Gap that's down. And these are mixed in here with Airbnb and Darden, and of course the Enphase and Zom, and there goes Canoe, 10%. Here's Etsy, 5.3%. Here's Matterport. Like, it almost doesn't make sense. Like, Wayfair was actually one of the companies that was holding up pretty strongly while tech was selling off. Oh, the furniture company's buying. No. Literally every stock is going through its sell-off period. Every stock is almost going through its initial round here of deleveraging, which is kind of interesting because it really echoes what Ray Dalio talks about in this potential great deleveraging coming. Personally, I think this early round of deleveraging that I think we're seeing with the weenie babies basically like, oh my gosh, we got a lot of margin too. We don't want to be in Archegos. Let's sell, let's cover a little bit, and let's reduce our risk a little bit at higher valuations. I wouldn't be surprised if that's exactly what's happening. Now, we don't know with certainty, and we probably won't know for weeks or potentially even months until we get some more clarity on why is all of this volatility happening. But the money's not clearly going from one place to another anymore. I think it's too simple to be able to say, oh, well, Kevin, I mean, it's going from the airlines today to the cruise lines today. Well, the problem is when airline shares go down, like when a stock goes from $100 to, let's say, $80, and the hedge funds are like, oh, we should rotate over to cruise lines. It's not like they got to pocket that $20. If people stop wanting to buy shares at a certain price, that money just instantly evaporates. Like, that's the interesting thing about stocks. I mean, ask yourself this. Why is it that a billionaire can be created because they own, let's say, $1 million worth of stock in their company, and one day it's worth $10, so, they're a 10 millionaire, and the next day, every share is worth $1,000 because they IPO'd. Like, literally nothing really changed there. Jerome Powell didn't come in and print the money printer. Just all of a sudden, because that company is now publicly trading, that person's shares that were worth $1 each are now worth $1,000 each. That's literally money created out of thin air. That same thing happens in reverse. So I don't necessarily think this is the hedge funds and the weenie babies here winning. I don't think they're winning right now. I think they're feeling the same pain that a lot of us are feeling in the market. The difference is I think they're over-leveraged and they have to sell. This is why we saw people like Chamath liquidate Virgin Galactic. You think after coming up on stage and telling everybody how great, and when I say stage, the public domain, telling everybody how great Virgin Galactic is and how excited about Virgin Galactic he is and how great its profitability is going to be in 2 years, you think after that he wanted to sell? I don't think so. I think he got forced to sell because he was so highly margined, so highly leveraged, that basically in order to remain competitive in the hedge fund world, you pretty much got to sit at like 80 to 100% margin. Call me crazy, but I think these Uno reverses we're seeing are a symptom of weenie babies being weenie babies. They're not a symptom of you making poor stock picks. The companies that we're buying, especially the companies we talk about on this channel, they're phenomenal companies. These are Christopportunities to be buying these stocks at just cheap levels. In my opinion, relatively cheap levels. Like Tesla under 700, it's still cheap. Even though we ran to like 710, 715 today. Now we're under 688 again. Enphase under 150? Come on. Canoe, you can't tell me that's an $8 company. Whatever. The point is, and Canoe is a little bit more of a speculative rebound play anyway. It's not like a big position. But anywho, I might add to that one because that one's getting real cheap. This is not to me anything but deleveraging, and in that's what's happening in my opinion. But the second thing, or the B, which is actually a good thing, is that the more this happens, the more this Uno reversing happens, in my opinion, the more we're de-risking the market. And I'm not just talking about prices going down. I'm talking about because we're getting this like up and down stair stepper of we're up, Uno reverse. We're up, Uno reverse. We're up, Uno reverse. We're actually, or at least some hedge funds, some weenie babies, are able to use those profits to pay down margin, and then they get back in the game. Pay down margin, get back in the game. Pay down margin, get back in the game. And hopefully it's de-risking the entire financial system. Now, I don't know. That is just a hope that I have. But personally, and this is the big bottom line for everyone, get your margin down if you have margin. Remember, options contracts do not give you margin. Like they don't offset the margin that you have. However, the cool thing about options is you can't get margin called. So like if you want to leverage, sometimes options are nice about that. I'm going to be releasing 14 lectures on margin and option in the Stocks and Psychology of Money group. It's gonna be great. They're super fun lectures. But anyway, and then we'll be adding even more because I'm always adding content to these courses. But anyway, this is really a big warning shot. Just keep that margin down that you have and go shopping. Take this extra time that we're getting, this extra blessing of more time, and go shopping. Just my 2 cents. Let me know what you think in the comments down below. Thank you so much for watching, and we'll see you in the next one.